How to get a fix and flip loan. I'm going to show you right here, right now. Done lots of them. Watch. So if you're watching this video, you're probably trying to figure out how to get money to fix up and flip a house. I've done hundreds, so I'm going to tell you how to do it and how it works. I typically would suggest that you start with getting some documents together. You're going to need 2 or 3, 4 months of bank statements to show your liquidity and your cash flow, and some reserves and capital, and your down payment. You're also going to need to have a credit report, and you're going to have to fill out a typical loan application, which your agent who is doing your loan or the lender or the bank or the institution may fill out with you online or send to you DocuSign and have you answer the questions in the loan. So how do you get the loan? Basically what happens is you do a sales contract on a property and you then apply to the lender, okay? And when you apply for the lender, you fill out a 1003, which is basically 4 pages of typical residential loan application. What's your assets? What's your liabilities? What is your little financial background? Where do you live? Who are you? What's your social security number? What's your driver's license? Your basic information, okay? And then a little about the loan, right? So a fix and flip loan, typically they're called bridge loans. They take you from as is value over the bridge to repaired value, which should be a lot higher, right? So hopefully the way you get those loans is you will basically put all that documentation together, and then you will contact the lender after you have contract to get the loan. Now, if you're brand new and you've never done this before, it's a good idea to just get the lender all your information before you buy something, so you can get all pre-qualified and ready to go, okay? Typically, they're not gonna lend you $1 million loan if you've never done a fix and flip house, all right? They're gonna wanna start small, and they're gonna wanna do one and see how you do. And after you build momentum, you will be able to get more loans. In my history now, I've done so many deals with different lenders that typically I can call them and they're going to put the deal together. But they have to put a file together for the fix and flip loan because they're going to sell those loans, and it has to have all the information in it on every single loan. And that information includes all of your information, the appraisal about the property, what it's worth today, what it's worth fixed up, and a little history about you, what have you done, and your credit report. They're going to pull your credit. Now, some of you say, well, they're going to pull my credit, they're going to give me a loan. That's not necessarily true. Okay, you could have a low score, but you could have a good property and they're willing to lend on it because there's going to be enough equity in there to make it work. They may require a little more down. They may require a little higher interest rate. They may require a little more fee, but oftentimes they will try to work with you within the parameters of your situation to get you the money to help you to buy a home. That doesn't mean everybody gets approved, but it does mean they're going to look at the options that are available for you with your particular scenario. Now, once you get a fix and flip application in, they're going to ask you for a budget, and that budget, which I've talked about on other videos, is going to include the cost of repairs that you need, whether it's exterior paint, interior paint, flooring, right? How much are kitchen cabinets? How much are counters? How much of the bathroom remodels, the primary, the secondary bathroom? What are you going to spend? 3, 4, 5 a bathroom, 6, 7, 8 a bathroom? Is there termite damage? Is there dry rot? Is there siding you need to fix? Are you going to add cultured marble to the front of the house? Do you need a roof? How much is that? You're going to replace the windows. How much is that? Landscaping, hauling off trash, new garage door. I mean, these are all the typical things that are done. Put in smoke detectors, put in carbon monoxide detectors, appliances, right? These are all things that you're going to do when you do a fix and flip, okay? So they're going to want a budget. And so in order for you to get the loan, you have to give them a budget that makes sense. And that doesn't have to be that difficult to do. I use my own people, but you can go out and get different contractors to give you some bids on very simple, a roof. Some of the stuff you may do yourself, or you get a painter. What's it cost to paint the inside? What's it cost to paint the outside? Is there any dry rot? Do you need to fix that? What's that going to cost? Okay. So you have to have an idea of your cost to fix it. So let's say your house you're buying is 200 grand and you're going to do 40 grand worth of fix up. So they're going to want to know that. And let's say your repaired value is 320. So you bought it for 2, you put 40 into it, it's worth 320, right? Okay. Now when you sell it, you're going to have costs to sell, which is your real estate fees and and that type of thing. And then you're also going to have what? Some carrying costs, right? So if you got a $200,000 loan and typically your payments, let's say it's a 10% interest only loan, so you're paying $20,000 a year because 10% of 200,000 is 20,000, right? So 20,000 divided by 12, right? You're about, $1,500, $1,600 a month in interest, something like that, right? So in your case, they want to see that you have the money to be able to make the payments, okay? If you don't, they may hold back reserves to make the payments during the loan, and that's an option. Now, the other thing that you're going to need to get that loan, we're going to talk about next, but please subscribe if you like this video and if it's helpful to you. I've been doing this for many years, over 30 now, and done a lot of fix and flip loans, done a lot of renovated property, and I actually am doing it today. I do it right now. I'm engaged with property right now. I bought a property this week. I got 2 contracts I signed yesterday for 2 other properties. These are fix and flip properties, and one is a vacation home. So I'm doing this all the time, right? So I'm not somebody who's just talking from theory, okay? So please subscribe. The last thing you need to know about getting a fix and flip loan is that once everything's in, they're going to send you a pre-qualification letter with the terms, and that's going to outline what the interest rate is and what the points are. You may be able to negotiate a little bit with that, but don't be grinding on your lenders because, in my view, if you grind on them all the time, they're not going to want to do business with you. They need to make money too. Everybody needs to make money in the deal, okay? So in order to get a fix and flip loan, you have to understand that the people that are lending you the money are going to want a fee for the money. They're going to charge for the work they're doing, and they're going to charge interest, which may seem a little high. My opinion with these hard money or fix and flip loans is that they're actually easier, even though they charge a little more money, because they're not as difficult. You don't have to go through all the underwriting you would to say buy a home you're going to live in, or to go through some of the more bigger institutions. They're going to want to see a lot more things. I had a deal years ago where I tried to use a bigger institution and I lost the deal. And it was a great deal because they wanted this and that and the other thing. And it just went on and on and on and on. And if I had a fix and flip loan, I could have been done in 2 or 3 weeks. And I was into this thing 6, 7 weeks. And finally the seller just said, I can't take it anymore. I'm going to sell it to somebody else. And I lost the deal. The institutional money, even though it was less interest rate, was more expensive because 1, I didn't get the money, and 2, it took a bunch of time, and 3, I lost the house that I could have made 30, 40, 50,000 on, right? Had I gone with the private money, yeah, it would have cost me more money. The interest rates would have been higher, but also would have made the 30 or 40,000, right? That I didn't make and I lost because I was trying to pinch, right? So it's okay to pinch, but remember with your lenders, you need to develop those relationships because without those relationships, you're not going to be able to get a fix and flip loan. They may do one, but if you're a big pain in the butt, they're not going to want to deal with you, okay? So lastly, when you do get the loan, make your payments and pay them off. Either refinance it or sell it. The other thing about how to get one is make sure that you give them some history about you. What do you know about real estate? Have you done this before? Are you brand new or whatever? Because they want to structure the loan to help you based on experience, okay? If you have a lot of experience, you may get one set of terms. If you're brand new, they may give you different terms. Like they may ask for an interest reserve, okay? So you're not overburdened with making the payments while you're fixing up the property. They may ask you, how long is it going to take you to fix the property? You should have an idea of that. I'm going to tell you right now, if you're doing full rehab, typically it's going to take you no less than a month, probably 2 to 3 months, all right? It takes longer than you think. Sometimes you can't get materials. Sometimes you can't get people over there. Somebody got sick. The roofer's backed up. They can't get over there to do the roof. So keep those things in mind when you're getting the fix and flip loan. So I'm Paul McGuire. I hope you subscribe. Continue to help you with your real estate investing. In terms of finding a fix and flip loan, I would definitely just Google hard money or private loans. I use CoreVest a lot, CoreVest, but there's others there, ArchWest. There's just a ton of them. And the other type of loan, which is hard money private loan, is private money lenders. There's brokers who take money from individuals who invest the money for an ongoing return, okay? And so they may put $100,000 into a loan and get 8%, so they get $8,000 a year on their $100,000 versus maybe putting it in a CD where they get 4%, they get $4,000. Well, that extra $4,000, they get 8 instead of 4, makes a difference, right? So maybe they got $500,000 out at 8%, gives them $40,000 a year in interest, which they can live on, versus $20,000 a year in interest, which isn't a lot or enough. So there are those out there. There's the institutions, which I talked about, that do money, and then there's seller financing, which is another way to get a fix and flip loan. Essentially, you don't get the money to fix it up, but you can get the seller to carry, sometimes at very good terms, and then go out and get additional money on maybe a line of credit on a different property, or refinance a different property and fix it up that way. All right, I'm Paul McGuire. I hope this helped you. Please join me in the next video where I talk more about wealth, real estate, and how to do real estate. Invest, flip, fix, remodel kitchens, bathrooms, and a whole host of other things like exchanges.